Hey guys, this is Job from Order Flow Labs, and tonight we're going to be discussing the volume profile. So, the volume profile itself is a display of volume that occurs at the price of the auction. So, instead of placing the volume below the candlestick that you're visualizing, this is displaying this on the y-axis where prices actually been, and you can see how much volume at that particular price has occurred. So it's the total volume traded as it relates to the price level the transaction has occurred. Here's another example. On this example, what we can see is up here at 3516, there is much less volume than down here at 3500. This large blip of volume here is important. That's called a high volume node. Down here, you can see where it diminishes and had a previous level of high volume. Where this volume occurs and how it grows during a session is ultimately what helps me guide my trading. And also where the lack of volume is certainly important. So a high volume node is a peak of volume around a price level. A low volume node is a valley of volume where very little price exchange occurs. The point of control is the absolute most volume of that session or that time frame you're visualizing. That can be an RTH session, that can be 1 week, that can be a day, that can be a 5-minute candle. The value area high is the top of the 70% of the volume. The value area low is the low of the 70% volume. We'll discuss the value area here a little bit more in detail in a second. But what we want to get under our belts is the high volume node, low volume node, the point of control. So if we look at this here, the yellow arrows signify the high volume nodes. We can see this large high volume node, this one here, and then this tertiary one up here. The blue arrows signal the low volume nodes, where there is lack of volume in exchange for the separate distributions. Low volume node here as well. The green arrow is where that white part of the volume changes to gray, and that top of that white is the top of the value. So on the bottom side of this profile would be the volume, or the bottom of the value area low. And so that's not displayed on this particular chart, but you can see here is the value area high. So high volume node is the peaks of the volume. Low volume node is where the valleys occur. Point of control is the red here. This red line signifies the largest of the high volume nodes and is the area of most interest on the particular session or time frame you're visualizing. Value area high and value area low is the top and bottom of the value area. The value area is where 70% of the volume occurs. So the value area, as we discussed here just a second ago, is where 70% of the volumes or trades take place. We can look at the top and the bottom of that, and we can mark that as a distribution curve. And so if we escape that range, we can say there's less interest based upon the mean of a distribution curve. And if we skip below, same and vice versa. As that value shifts, that's important to show the interest in that area. Volume build is simply interest in a particular price. And so as you gather interest in that range, you're going to gather volume. And as interest dwindles, you will also dwindle in volume itself. When prices are in consolidation, they're said to have found value. And so as they move around in what we would say is chop, they're creating that value. They're building volume, they're creating that value. And when they move swiftly out of that range and they create a low volume area into the next range, they're said to be seeking new value. And the previous area they were in is said to be currently unfair. And so if they escape or they break out into a new range, they're seeking new value and seeking another balance. When a price rejection occurs, price escapes, creates a new area of distribution, and shows that the prior range of high volume interest was no longer accepted. So as the auction takes place here, what we can see here on the left is that we auction down, and as we auction down, we see dwindling volume. It came down first, there was less interest. It came back into the primary meat of the interest, came back into the low area, it was rejected again, and as it began to continue to auction upward, it was followed with volume. And so price rejection is simply price moving out of that range followed with volume build. How does volume work around the distribution? Kind of in the same way as an atom rotates around a nucleus. And so you can see how, or an electron, you can see how this electron rotates in a circular fashion around this nucleus. This is auctioning up and down to the edges where it is no longer pulled towards the center of that volume area. If it were to escape this range, it would look like this. So as it escapes, it goes to the next area of interest and vice versa. And so these centers where we're seeing the electron escape what's called a valence is moving to a new nucleus and creating a high volume area. That's why the low volume nodes are of particular importance. Price typically moves swiftly or is protected to keep it in that range. Kind of like this. If price was distributing around a mean, you can see it rotate back and forth. And if it were to come up and not build volume, you can expect that to come back into the area of interest. That's particularly important, especially for intraday trading, for gauging your position, seeing how much interest is in your favor. This is the volume profile, part 1. We've discussed high volume nodes, low volume nodes, the value area high, the value area low, and the point of control. Volume is seen as interest at a particular price level. As interest dwindles, then price can retrace into the area of prior interest as long as it breaches the low volume areas. As it builds volume in the direction that it's going, this shows more interest in that area and likelihood of a continuation.